Master Drilling reported a 10% increase in full-year headline earnings per share to 115 cents. The company saw revenue climb 19% to 687 million rand. And Danie Pretorius, who's the CEO of Master Drilling, joins us at the desk now for more detail on the numbers. Danie, thanks so much for joining us. Well, as I said, those are the headline numbers that we're looking at. Give us some perspective on the numbers within your operating context.
Nisha, thanks for the opportunity. Obviously, to grow the company, if you look at the headlines in rand terms, 19.6%, close to 20% is certainly something in the volatility of the market which we're quite proud of. What's important to ourselves is that the forecast we did last year, the beginning of last year, was pretty much in line with what it turned out to be. Our utilization dropped down from 80% to around about 71%. And that was due to machines being sent from South Africa to South America and machines shipped from Brazil to the rest of the South American continent. And given the drop in utilization and still achieving the forecast, I think it's quite nice.
So how exactly are you getting things right here? Because you're exposed to an industry, the mining space specifically, that's under pressure in South Africa, but globally as well, as we've had that demand scenario pretty tentative.
We took a view on the platinum early last year, and by the way, that was before the strikes came into play. And fortunately for us at the time, the machines were sent out in time, and the revenues in South Africa and the profitability of this company in South Africa dropped. But obviously we made it up in South America. And well, the short-term impact of that was a couple of months, 4 or 5 months before those machines came onto stream again. We saw it in the second half of last year, with quite a nice recovery from the group overall. If you look at the South American mining industry, quite stable, not the volatility that we see in South Africa. And I think probably at the time the right decision to take last year.
To what extent does this influence the kind of exposure you're going to have to the South African markets moving forward, given this experience you have, given the fact that it's your South American operations that have acted as a buffer, and looking at the fact that you are looking at exploring joint ventures in Europe and Asia as well? If
you look at the company, the current, I think what is really important to note is the company's dollar versus rand income in 2011 was 60-40, and that swung around to 40-60. So the dollar-based income of the company, as we speak, probably 60-40, $60 and 40 rands, which is quite a nice position to be in. We're going into this year with an order book, just about a full order book, just on $100 million going forward. We've just been awarded a Kumba contract, close to $1 billion, in fact north of $1 billion rand, which will run over 5 years. So I think the mix between dollars and local currency, and we're still committed to the local industry. We keep a number of machines.
But looking at a higher exposure to the global arena?
Absolutely.
Okay. Give us a sense of what you're feeling when it comes to the South African mining scene right now. It's got to be making you a little nervous. I mean, we in the past used to talk about a strike season, a labour unrest. The season hasn't come to an end.
We see the South African mining industry for the short term at least as soft. We don't believe record earnings to come from, at least for the next 2 years, from South Africa. That probably excludes the Kumba side of the business, which is more the exploration side of the business. But on the raise boring side, which is probably the bulk of the business, we see that as soft going forward for the medium term.
Within this context, when it comes to your operations and the kind of work or labour force you're looking at, your automation upgrade plans, one would assume has an impact on the labour side of things. To what extent?
It certainly has, and I think it's all about safety and the quality side of the business. I think
safety, quality, cost as well.
Absolutely, absolutely. I think labour is pretty much 50% of our current, 35 to 50% of our current cost component, and obviously with automation comes less labour. That's true, and obviously that reduces the risk, which is safety. So I think it's pretty much 3 things. It's safety, efficiency, and then as we said, cost.
Having said that, though, you are employing on a path of looking at upskilling and training in these sophisticated computerized systems.
Absolutely. The company employed close to 2,000 people worldwide. If we grow the company between 10 and 20%, we need to add at least 200 to 300 people per annum to to our people. So it's quite a number of people to add. Given the skill level that's available, especially in South Africa, it makes it quite difficult. And we've got quite a nice training centre set out in our head office here in South Africa, and also a very nice training centre in Lima, Peru. So what we try and do, especially the last couple of years, focused heavily on the trading side of the business.
Mm-hmm. Looking at investments, I mean, you're making investments in that regard. What other investments are you looking towards to grow the business? Because your press release says you're looking, when it comes to your strategy, to grow your fleet to support future growth, and that seems pretty obvious. So give us some of the detail in terms of the kind of investments you're making to see this growth come through.
I think as far as the investment is concerned, probably three things to add to that. I think the one area which we try and do is probably the joint venture opportunities there are, especially when it comes to Europe and Asia. We took a view that there's probably some things to learn from that part of the world. Mm-hmm. I think South Africa, especially South Africa, is probably lacking when it comes to technology and certain skills that one can probably recruit or use to the benefit of the company. I think the second thing which is probably important to understand is the type of machines and equipment that the mines nowadays allow, especially in South America, is very different from what it was 5 and 10 years ago. I think there's going to be a big shift when it comes to the type of equipment that mines would allow on their sites.